Sales beat, profit beats, forecasts upgraded. Dig into the nitty-gritty for us.
I know, it's almost too good to be true. Another quarter, they beat on the top line, they beat on the bottom line, they even raised sales forecast. Something that was interesting, though, is that the core business, the annual active buyers, that number actually didn't grow very much. It grew less than 10%. So a lot of the growth, a lot of the reasons why investors are pushing up the stock today, it's because of the growth and its more fledgling businesses. We saw triple-digit growth in its cloud computing division. We also saw triple-digit growth in its media digital entertainment business. So a lot of talk about how that's the next new growth strategy for Alibaba and how they're going to integrate all of these businesses together.
I mean, just digging into some of the Bloomberg functions, if you go into analyst recommendations, you go into Alibaba, get into ANR on the Bloomberg, you will see phenomenal 90% of analysts, that's 42 out of the 47, say buy this stock. Not one single one says sell, 10% say hold. We saw in Deutsche Bank, Cantor, all upgrade their price targets today. And you'll see, though, that still the price target is way off where the price, much higher than where the share price is currently trading. Tim, elaborate on these new big bets that potentially is helping some of these buy recommendations. We heard there from Selena about the entertainment. Where's the juice here?
Well, look, really what it comes down to is this. They've got cloud, and what's interesting is their cloud business, it is a fledgling business, it's growing. But what's interesting is if you dig through the numbers, the cloud business ARPU is actually rising and staying stable. Normally we see these businesses, when they grow, you get less revenue per user because some of the lower tier users come in and start using it. But in fact, it's staying stable, and that's a really good sign for Alibaba. Now, it's still losing money, to be sure, so that's, of course, not a good sign. But the fact that they're able to keep that stable is very, very important for them. And then, of course, on the entertainment side as well, and again, it's losing money, but it's growing. And these are two areas that show that Alibaba is looking into and can actually find some success out of their main business, which is simply selling products online. So these two new areas, really, they are drag on earnings right now, but the fact that they're growing shows that Alibaba has a few more tricks up its sleeve.
And Selena, what it really feels like is that Alibaba is morphing into an Amazon here, taking a few leaves out of their book. What did the executives say about these new businesses?
I think something that people are expecting more details on was this deal with In Time. It's several $billion for Alibaba. They want to buy out this physical brick and mortar department store. And this is part of Jack Ma's vision to transform offline retail and integrate it with some of these e-commerce initiatives. So I think some analysts are still pretty skeptical of, is it really worth it to spend that much on physical retail? But Alibaba now is all about e-commerce. Is so yesterday. We're not about integrating digital media, using content to draw users, leveraging our data to get people to spend more time on our platforms, and to transform physical retail so that people in brick and mortar stores can use our technology to shop better, which, as you mentioned, is not too different from what Amazon's doing. They recently opened grocery stores that use very advanced technology, and they also have some physical bookstores.
Tim, I think we heard just Selena there talking about maybe there is still a little bit of caution out there. Interesting, you look at the short interest on this particular stock, and it's actually relatively high despite all the buys and the holds that we have. Something Selena that pointed out earlier. What are the risk factors that might be driving this short interest?
Well, look, one of the key ones, which Selena just pointed out, is the fact that their user growth is slowing. They're now in single-digit user growth. That's a problem for them, of course, but they are managing to grow the amount of sales per user. But really, the other thing is that they've got a lot of other businesses. They're, of course, invested in Ant Financial and so many other different kinds of businesses, and they're a little bit of a black box. So a lot of the shorts are really betting on the fact that there is problems here. But so far, the shorts who've been trying to have a go at shorting the stock over the last few years haven't really paid out. So there's been a lot of people probably losing money, I'd be guessing, on trying to short the stock. Again, we're seeing this again. A lot of people betting that perhaps there is something to come out of this that will be on the downside. But so far, they really haven't been able to make much money from those short bets.
They certainly haven't thus far. And Selena, what about, we broke the news with you earlier about the Olympic bet that is being made by Alibaba as well. Any more flesh to the bones of the direction that Alibaba is going in terms of globalization?
I think executives really were reiterating that this is something that's really going to get our global brand out there. As they try to get about half of the revenue from abroad, it's really important that they can elevate their brand. Tim was just talking about some risk factors earlier. Let's also not forget that they were just put back on the USTR's list, Notorious Markets list, for being a haven for knockoffs. So because by sponsoring the Olympics are now going to have their name associated with the Olympic Games around the world, and hopefully this can bolster their reputation and help more businesses to sign onto their platforms.